Welcome to Trading Lounge and the US indices for Tuesday, February the 22nd. I've been having a few blackouts this morning, so let's see how we go. Hopefully we can get through this video and get it posted. It gets a bit stormy up here in the mountains. With the S&P here, we can see the stochastics is pulling down, which is helpful. The 38.2% retracement level we're looking for is at 41. The other situation is that this move down through here, it's putting a bit of weight to the downside and looks like it will probably break lower. So in one way or another, we'll have to put wave 4 over here. How we count this here still needs to be resolved. One of the points is that from this top here moving down, do we count it as 3 waves down as a WXY, or do we count it down in 5 waves? So that still needs to be resolved. The other point is that with the NASDAQ coming down to its wave 4, it's starting to push a little bit too far down now, and yeah, it sort of puts a bit of a question mark on this wave 4 here. So I'm just wondering if I need to restructure this particular trend here for this as well. So first of all, let's just go to the daily chart here, and this is how we've had it at this point. But I don't think this is going to be the case now with wave 1 up here, or even wave 1 to this point. That's just not going to play out. There's still a possibility, but let's just go to, and the stochastics is down here as well. That's sort of helpful as well. On the 4-hour chart, just holding that count there, we're looking at it something like this here. So wave 1 here with an ABC coming down here, 1, 2, 3, 4, 5. So we're looking for that little rally there yesterday sort of thing. So I know markets are being closed, but the futures market is open. So we really need this to basically stop at this particular point here. Will that be the case? I'm not sure, but we'll also need to talk about moves that are further down at this point. So it's still possible to have this, but it's looking a little bit thin on the ground at this point. So coming back to the daily chart here for a moment, do we need to look, because if the market comes, we can count 5 waves down here. If I go to I think I've got it here. Let's just bring in a bit more data. We've had a look at this before, but we'll just look at it again. So this is the bearish count from that top area there. Let me just get this. Wasn't sure how many to bring in at this point. That will do the trick. Don't need that. So, and counting it down, like I said, in this instance here, and this is also debatable, this top here as well, like the Dow Jones has taken out that top there quite clearly. So if we have a look at the Dow Jones for a moment on 500 ticks here, we can go an A wave, a B wave, and 1 and 2 and 3 and 4 and 5 over here for this. So in this case, it would just be natural to count 5 waves down. So the Dow Jones is going to take us much further down here. We could look at it as a B. I don't know what that D is doing up at that point, but anyway, we could look at it as a triangle pattern, but I don't think that's the case either. But yeah, the question is do we count 5 waves down in this space? But yeah, just looking at the Dow Jones here, we've got 1, 2, 3, 4, 5. So having that top there's a good case for that. So we may need to also put this B wave over here as a bit of a truncated situation. But either way, we count 1 from here and 2 to here, or 1 and 2 and so on. But either way, it's going to put pressure on this low, isn't it? So do we count 5 waves down? We were looking down, always been looking down at 4,100, but I'm a little bit curious now because of the NASDAQ pulling down even further. So if I can bring the NASDAQ here, if I take, as an example here, just take the low of wave 2 to the top of wave 3 here. We're already at the 50%. So if this, obviously this is also just breaking the lows here, so it's likely to be drawn to the closest largest number, which is 13,000, and that pulling back 61.8%. So that's like, you know, that's not wave 4 activity. So that means that the 5 waves up here, my first instinct is the first 5 waves up here needs to be dropped down, basically back down into 1, 2, 3, 4. I'd have to check on the Dow, but I can show you that on the S&P, for example. If I come back here on the S&P and look at this at 200 and take this to, I think it was here. Just looking at another way to count. So in this case, 1 and 2 here, and 3 here, and 4 and 5 here for wave 1. So instead of having wave 1 over here, having it here, and then having 1 and 2 here, and then I won't pull this apart in front of you right now, but we can do it later, but it counts quite nicely to wave 3 here, 4 here, and 5 here for third wave, fourth wave, and a fifth wave in here for the top here. And if we've got a top in here, well, what does that mean, you know? So let me just think where I put. Okay, so I had that on the monthly chart. So it would also rearrange the count differently as well. So I'm just shooting the breeze here. I'm just sort of sharing some ideas at this particular point. Nothing is set in concrete, but that means that this wave, this top here, would be in play. Now, it's either we've got wave 4 down here and we've got wave 5 sitting up here, and that's the top of this whole trend up through here. Or we can look at this as wave 1 and 2. Now we can still have wave 4 here, so you know we don't need to sort of panic yet, but we do need to have a look at other counts at this particular point in time. But as far as we go at the moment, we'll just focus on the short-term trend to the downside, and that will keep us busy enough. So it's probably got nothing to do with the Ukraine situation, I don't think. It would be more to do with the interest rate rise expected coming into the market. So those rate rises expected further, further of those expected to come in, which is obviously going to put more pressure on these markets. So in the first instance, let's see how the market moves down through here into the 4,000 and 4,100, and we'll have a look at how this counts down here. And we also need to resolve, do we take it from this high or do we take it from this high? So yeah, that's sort of where we are with the S&P and also the NASDAQ as well. We've been looking at this move down through here on, I think it was this chart here. Let me bring some more data in here for this. Yep, so I counted this slightly different here. Let me just bring in a bit more data. This actually gives me 5 waves down from the top. So 20 should do the top. Now it's a bit of a long shot. So from this high here, looking at this as wave 1 here, and then an A, B, C for this one here, and then an A all the way from an A and a B and a C wave over here for wave 2. Now it's a bit of a long shot, but doable. Otherwise, we need to look at this first. I mean, I've always looked at this first move down here as in 3 waves, so that tells me that it's corrective at that point. But could we squeeze wave 1 into here for that? Is that doable? If that is the case, then we've got 1, 2, 3, 4, 5 here for the third wave, fourth wave here that doesn't overlap wave 1, and then we're looking down here for wave 5 here. So that would give us 5 waves down from the high at that point. If that's the case, then we would see this finish off in 5 waves here, and then we would see an ABC pattern here, and then we would see another 5 waves down at that point. So that's where it gets a little bit sort of hairy, I guess, at that point. Do we look at this as a larger A, B, and C down through to here? The other point too, if we're heading into a bigger bearish trend, well, then I would sort of expect the lows to come in for this around, well, the March 21st equinox sort of date that lines up with accounting dates as well. That's probably more to the point of it all. The COVID move was also based on that previous low, but we see that low come in a lot, so that date for lows. So it's something that we can give a bit of this date here, the March sort of 21st, the equinox date, but we see that a lot in the markets. So that's a good possible cycle date for whatever occurs at this particular point. Yeah, so just to recap here, the S&P is holding up quite nicely and coming down into 4-1. How to count this is a little bit of a puzzle at this point, but we'll get that sorted. And remember that the NASDAQ had this as the top rather than this one as the top. And we could still count this down here as a WXY, but we would need to see this move down here in 3 waves and not 5 waves at that point. So yeah, there's different ways we can count this down here. Also want to have a look at the NASDAQ. We could expect that to be pulled down closer to 13,000. Now the Russell and the SP500 mid-cap are kind of the same. Now the important point here though is that if this wave 2 low is breached, which it's likely to breach at about 1960, the current price is 1964, so it's highly likely it's going to be breached, then it destroys this being wave 1 and 2 here and 1 and 2, and that means we need to look at this as a corrective pattern. And if it's going to be a corrective pattern, then it's going to make a new low, isn't it? If it makes that as a corrective pattern, then eventually it's going to take that low out here. So what does that mean as well? You know, it's the same situation here as well. So we could count this as already being completed up here as well. Let's just look at this in a slightly different way here. So we'd still put that in there, and would have to put this one here, because otherwise it's going to pull back too far at that point. And that means that we would be in for a larger move here for this as well. That means we'll end up with 5 waves to the downside. So we've got 5 waves here, so we'd have to look at that as a wave 3 here, and this is a wave 4 here, and then coming down into the 1800 here at minimum for wave 5 at that point. So we'll be looking from the top here as 1, 2, 3, 4, 5 here. So straight away this is going to make this wave A here, or wave 1 at this point. So that's another thing that we need to look at this point, which is obviously going to, you know, see the stocks in this area move lower as well. So it's not confirmed yet, but the logical thing would do to be looking at this as 1 and 2 and 3 and 4 and 5. And I think we've looked at this before, perhaps on the tick chart, or maybe I forgot, because I forgot to do the chart before on this, which I was going to have a look at this point. So yeah, looking down here as wave 1, ABC for wave 2. We've got 5 waves in here. There's no problems with that, with 1 and 2 here, and 3, 4, 5. So we'll need to look at this as wave A, B and C here for wave 4, and then down for 1 and 2, and then wave 3 normally comes in around the bottom here, so we'd look at it sort of like that, and then this would be down at 18 at this point. Now, so that would be the logical thing, and that would be well, the 1960 here, that needs to be breached. If that's breached, then that makes that corrective. It's still possible that we could look at this as an A wave and a B wave coming down here and a C wave back up here, but still, whichever way we look at it, it would still be corrective and not bullish. It would be a bearish corrective rally. So we just need to see how that plays out at that point. But also the fact that it's breaching 2000 to again, is obviously not a good sign for the bulls at this point. So, yeah, the next level to the downside will be 18. I mean, 19 will put up a little bit of an effort at that point, but it's not going to, it's not, I mean, it's got this previous low here, so there will be a bounce here, but it will be this third and fourth here, and then drop down into 18, which is the next sort of strongest level, the minor level at that point. Alrighty, so that's all of that, and yeah, just to recap here, the NASDAQ has already taken the low out here, so that means it will do it on the S&P, and also the other indices as well, the Dow, the SP500, the Russell, the SP500, and so on. And we need to count 5 waves down. So with the NASDAQ here, even though the Dow's taken out the top here, in this case we'll need to take it here as 1 and 2, and then 1 and 2 here. It can't be 3 here because wave 4 overlaps wave 1, so it's 1 and 2. And going down for the third wave, and 1 and 2 and 3, 4, 5 building down. So we can expect it to move down. And with the S&P 500, we can also expect it to move down to 4,100, but also possibly the 4 here. But when these pull down, this is the 38.2% retracement level here for the S&P, and the wave 4 here is acceptable at this point, but it's not really acceptable for the NASDAQ down at 13 here, because it brings it down into the 61.8% at that point. And obviously we know some stocks, you know, Shopify, Square, Meta, all of those sorts of stocks have been hammered. Even Cathie Wood's, let's just have a look at that for a moment. Let me just have a look at this here, at the ARK Invest chart here. So this is just a daily chart, and it's Cathie Wood's ARK Invest here. So not to say that these are governing the particular market in such a way, but you know, we can see that we've got 1, 2, 3, 4, 5 down to this point, then ABC. So it does look like it's an A wave here and a B wave here. I'd have to figure out this a little bit, but just looking at this here, this would be 5 waves to here, so that would be like wave 1, and then 1 and 2 and 3 and 4 and 5 here. So that would take us to here. So there's still another move here. So the ARK Invest will take us down to, take us lower into the 50,000 area just from this little move here, just putting this 5 waves here, just to give you a bit of an idea. That will come in, that will bounce off the 50 there. That can come back to that previous wave 4. So yeah, we're going to see that, and if I put that, sort of give a bit of equality to these structures here, so we'll see this down at 30.40 for Cathie Wood's ARK Invest. Now I need to resolve this, so I'll give that a little bit of a thought, but I can just see here that this needs to come down further. We won't be turning here, but we will get the next bounce off. Well, 65 is a medium level, so that's going to play a part there. Well, it is, that's the medium level there. And then of course we've got major levels, so that's also going to play out at the 50 there as well. That's not coming up because I need to drop that in first, then take that away. Yeah, so going to be a fair bit of bouncing at this point that probably won't come back up that far, but anyway, you get the picture that we still need to come down here further. Is there a possibility that this could be 1, 2, 3, 4, 5 for 1 here, and 2 and 3 and 4 and 5? Yeah, but it'll still bring us down into 50 at that point. Anyway, I'll do some work on this and we'll get back to that, but still further downside for those particular stocks. and these stocks as well. So I don't think it's got anything to do with the Ukraine-Russia situation. I think it's got more to do with rate rises and controlling inflation at that point. So yeah, so we could be in for more of a bearish ride at this point. It's not the bullish. The bullish side is it's diminishing. I'll take a look at stocks again to see how they look. Alrighty, cheers.